Hello, welcome everyone. It's been a while since I've been able to do a video upload. Some of you have met me. We were out in Denver, Colorado, and now we're in Las Vegas. We're going to be doing a quick presentation for a lot of friends with Thinkorswim. There's a small investment user group out here in Las Vegas on Saturday morning. And then we fly directly back home on Sunday. So a lot going on here. The persons playing at the algo trading room seem to have been doing some really amazing things, catching some great swings, and I'll get to that in a minute. But what I wanted to go over is what are we doing with the market here, as we wrote about in the weekly thoughts and observations, and warning people about watchful for the market to have maybe some follow-through strength up to the person's pivot weekly resistance. Weekly and monthly pivot resistance is exactly where we are in the major indices. Let's take a look at that. All right, so this was this week's Thoughts and Observations newsletter. And, one of the interesting components is that we were, I'm thinking we're going to encounter profit taking and arrest. And I believe that the markets we might take is, and this is what we wrote for this after Easter, was if we do see follow through strength in the spider and trade near person's pivot resistance level as indicated before, so above. So let's take a look. 292.80 is weekly pivot resistance in the spiders. And again, monthly, we talked about that right here. If we do trade near the weekly and monthly period pivot point resistance levels, then look where we have a confluence: 293.30, 292.80, pretty close enough. And that was what we were talking about here. And we said that this would give us an opportunity to scalp from the short side in the S&P futures right there. So that was our anticipation, that we may see follow-through strength. We also had a McClellan oscillator reading right here. More importantly, I've been talking about that healthcare and biotech should be joining this market trend, but they are not. I don't know if it's because of maybe I can't even say the word, politics, let's call it that, and lower drug prices. But either way, we haven't seen any participation in that sector in this move. So as I move forward in the market, and you can, what we did in the last tweet that we sent out was that we had dumped our long Kellogg's position last week. So we got stopped out of Ab Marley, thank God, and we exited our long Kellogg's for about a 6% gain. This week, coming into this week, I still, even though Celgene's being bought out, I still thought that on market weakness, we could take advantage of a market range and try to get in at Celgene on a dip at 91.77. Gang, we didn't come that far away from that today. Bayesian, we tried to get into Bayesian. Yes, the market did trade below this low, but we gave this trade out in the live trading room. But the as far as the thoughts and observations, we did not take the trade, because by the time the email got sent out to everyone and they received it, the trade had already happened. So we're not taking credit for that, even though I guess we could, because we were addressing this in the live trading room before the email and the newsletter was sent out. Anyway, Expedia, Celgene, Bayesian, that was one of the focuses for this week. And up so far for the year, we're doing okay. As you see, 140% cumulative gains in our stock trades in our rotation. Now, I was thinking I was a little jaded because we had gotten out. I started to see some volume divergences in Noble Energy and Hess. And as you can see over here, on April 13th, we liquidated our long Noble. Got out for about 11% gain, 10.39, excuse me, to be precise. Hess, we got out for about a 10.1% gain. And so we had exited those trades, and I'm pretty happy we did, because let's review today's tape. I'm going to expand that right here. And the first thing that I wanted to, I'll go over and take a look at Hess real quick, and the XOP. Here we are with a 2-day dump. Now, what was the volume trends that I saw weakening? This volume indicator right here, the person's volume indicator. It started, as the price started to go up, it wasn't making newer aggressive higher highs. It was actually showing divergence. So I wasn't a big fan of that. We also started to see the relative strength wasn't breaking out. This is the PMC indicator. So this isn't a perfect indicator. No indicator is perfect, but I can tell you what, when you compare our volume indicator and complete the relevance of the specific technical tools logically interwoven. We have Person's pivots, the PPS, we have relative strength, compare the strength of a stock to the overall market, and we have our volume indicator. Now look at on balance volume, friends. You can clearly see it's trending up, giving people a false sense of security that this is a strong trending volume condition. And our volume indicator, which highlights and illustrates percent changes of volume, it gave a totally different reading. And that's a divergence between two volume indicators. And that's why I consistently say this indicator is worth its weight in gold. Now, is it worthwhile getting into Hess? Is it worthwhile getting into the energy sector? Well, first let's take a look. The XOP, the energy, oil, and gas exploration sector, really kind of had a little bit of issues, and we're right back to where we started about 2 weeks ago, and we're trading against this old shelf of support in the market. My guess is, we might have some follow-through weakness, and you want to pay attention for maybe intraday buy signals to set up on a PPS 15 or 60 minute, somewhere near that white line in the sand. It's 31.19. So, maybe it goes to 31 even. Maybe a buy signal doesn't happen, but that's what I'm saying. Watch for if the market, if that zone right in there holds in support. That would be impressive. If we take a look at the worst performing sectors today, we had energy, and let's get to our screen here. I hope this is visualized. We had XOP, OIH, transportations fell apart, housing fell apart, industrials with not just 3M, but my boys, Illinois Toolwork. ITW came out and said, poor sales to for car manufacturing parts, but they did cite in Illinois Toolworks, and let me get that back up, ITW, Illinois Toolworks, they cited that they have strong sales to their European markets. That was very interesting. So, I mean, is this to me, Illinois Toolworks, I've been talking about this all year, is a good harbinger, a good indicator for how the economy is doing. Overall, we've even told people that you may want to trade it from the long side since February. And now, after earnings came out, the question begs, is it a sell or a buy? And I believe that it came right to this old shelf of what was once resistance. It pulled back to support. It held. Now, as it was rising up here in early April, the momentum of the volume was moving down. You can see the histogram. I want everyone to focus in on this indicator right here. The histogram components are weakening. It's showing that there's a shift of volume momentum, and that's very good. That shows maybe somebody, insiders, had some inside information and they were distributing, they were selling up there. Now what we need to watch is over the next couple days or into next week, if we start to see the opposite. We want to see the volume start to show accumulation. So where will that come in from? My guess is, if it got back to where this whole rally started, somewhere between 144, 147, somewhere in there, we'll see if there's some active buying, and that would be very good sign for maybe the industrial sector to come back to life. And I like watching that more so than I like to put my faith into maybe a stock like Caterpillar, CAT. So let me go with you here. Why do I say that? Well, Caterpillar hasn't gone anywhere, and everyone looks at it. And to me, it's not the all high and mighty stock, quite frankly, right now in this time frame, both as a trade and as an indicator of the strength of the sector. That's just my humble opinion. So that's why I put a little bit more faith in Illinois Toolworks as a leading indicator for the industrial sector, more so than Caterpillar right now. All right, moving on. What do I see happening in the market? Is this the top? Is the top in? For that, we'll take a look at the advanced decline information and take a look at, in order to figure out where we've might go, let's see where we've come from. So all we have done is we got this massive now double top in the market. We're at pivot resistance. No one sees a little red arrow up here. Advanced decline is making higher highs, higher lows. Volume was not impressive on any stretch of the imagination. So the question is the top in? Guys, I don't have a sell signal. I got rising moving averages, so I think there's people that will be willing to buy down below on dips, but yet there's selling opportunities up against, leaning against the resistance. And remember, that's what I wrote about here. I said people can take advantage, and let's review what we wrote about. We said people can take advantage of scalping from the short side. Again, my take is if we do see follow-through strength in spiders and trade near the person's pivot resistance levels as indicated above, then this may give short-term counter-trend traders an opportunity to scalp from the short side in the S&P futures. So that is what I believe we will be in that kind of a range. Now, let's go and take a look at the algo optimizers and see what things look like there. All right, this is today's trade. It was a tricky trade. There's no doubt about it. I was in the room momentarily today, and we did post out that we had a 5-minute sell signal. The first scale out was at that blue line. It trailed the stop. It got out. It went long. It got stopped out with a small loss. It went long. The market was doing great, and then we had one of these major down hickeys stopped us out with a profit right there. Continued to go up. It went short. It covered. It went long, covered, went short. It had a little trade in here. Overall, a great day of catching almost every one of these legs in the marketplace. By the way, it stops trading after a certain time. In this case, we don't take any more new trades going forward. This is what happened after, again, the after hours action right now. Amazon had a beat and it did well. What's causing Starbucks did well? What's causing the market to go down? The semiconductors. Intel is down nearly 9%. So more importantly, let me share with you our VXX position model. It went short before the holiday, the Easter holiday. It covered that short position with a small profit, and now volatility, it has not generated a new short position. The volume action here on the VXXB on our proprietary volume tool is pointing up, not down. To me, if we're going to need to see kind of like a momentum killer, which we're starting to see, a momentum killer is when the histogram bars make lower highs like that. So when we see the momentum killer like this, then we look for a sell signal. My guess is volatility is probably going to go up a little bit into that zone and retest those highs, and this is the VXXB. So my guess is, let's see. My guess is that the market is still kind of in a range right now, and that we are. I can't tell you like let's get net short this market right here, but I think what we can do is say that for the minute we've gone from a strong trend up, and what's the next phase that we should enter? A consolidation phase. And that's more of what I'm looking at to make a better judgment of where we go. Now, this is the main trading room. A couple things that we're looking at is, of course, with the positions we're trying to buy in Beozin this week. And again, on Monday, we had the area we talked about it in the trading room. That was the trade of the week. You'll notice that Beozin, the weekly pivot area held very nicely, and that's the blue line here. So that's what we were looking for. We had a PPS buy signal, and the rest is history. Intuit had a nice little upside move from what we talked about it in our live trading room. And Dropbox had a nice little move since we talked about it. XOP, this is the one that we wanted to see lift off. And here's what I really want to get into, guys, is the biotech. So I'm going to maximize this because I actually put a video out and talked about sector rotation, and it yet has not occurred, which is I thought we would start to see if this market's going to get any emphasis to the sustainability to the upside. We need to see if one sector gets sold off for profit taking, then something else has to take its place with strong weighting, and the strong weighting is biotech. If you look at this little high right there, that one single candle right there, we need to see a close greater than that. And I don't mean one close. I mean on a 60-minute basis, and this is a 15-minute chart, but I want to see two closes greater than that resistance line. And if that occurs, here's my thoughts. I have over here the leveraged ETF on biotech. So let's go over here, and we're going to change this from 15 to a 1 hour. All right. We got all kinds of lines in here because these are the upside resistance up here. Let me get that right back into focus for you. There we go. All right. So on a daily chart, this is our longer term resistance up here. And this is, we kind of blew through support. So what do you think that I'm looking for? You see that green line? You see this gold line? I'm waiting to see if Labu, which is again the leveraged ETF on the biotech, we need to get a close greater than both of those, that whole area in here, which is the gold line, or let's call it this little that focus of that green line, which is around 53.19 to be precise, is the exact number. Actually, I need to see a number get above 53.19, and if we can see that on an hourly basis, and are we doing one bar close? No, we want to see a 2-bar close, 2 hours. Why? Because sometimes the market goes up 1 hour and the very next bar comes right back down, and that's an equal and opposite. So if you get 2 bars to close greater than that line, it will never guarantee 100% success, but it improves the odds that we are ready to see more follow-through action. If that's the case, I think we come right back up into this resistance zone right there. So that's, if that occurs, here's the connect the dot story. It's all weighing in on what's keeping, in my humble opinion, the Russell down. We don't have participation from small cap healthcare. We don't have participation in small cap biotech. We have now the oil sector, small cap energy down. We have the regional banks aren't falling apart, but they're not rallying. Therefore, they're not lifting the Russell. So it is my contention, if we are going to have any follow-through strength in the market, it's got to come from healthcare. And if that's the case, then only can we look to be a buyer of maybe the Russell, which has a whole lot of potential to the upside. So once again, we cannot break out and get out of its own way, so to speak. We need to see, why do we keep rallying and failing? Because we don't get that weight of the biotech sector. So the secret to win, if someone asks me, hey, John, when is this Russell going to break out? It's lagging behind all other stock indices. Well, you can draw, if I could draw a straight line, I would. But if you can see, we haven't been able to close, and we keep getting like these little pops and then flops, a pop and then a flop, a pop and then flop, pop, flop, pop, flop. Well, if you get a 2-period close greater than that level of resistance, we're going up. And what should be the key takeaway before we rally? Well, the key takeaway should be the leadership in IBB. So if you see the biotechs break out, you can take a position, take a shot in Labu. I've given you the point of breakout that will demonstrate strength and the conditions in which we want to see. And then you can start looking at maybe a position in the Russell, or if you feel a little bit more aggressive, go with the long in the TNA. That's my 2 cents in the market and what I'm looking at. Lastly, if I may go over here, friends, I want to bring into your attention to the main trade page here. Let me get over to the main trade page. One more second. All right. So transportation, transports have been rising into this market, but today we generated a sell signal on the effect of United Parcel Service, the Boys and Brown. Boys and Brown got pummeled. They came out and they said poor earnings because, and they blamed it on weather. FDX, that's another one, logistics that's been down. American Airlines, let's take a look at the airline sector. The airline sector didn't do so well. If you take a look at today, it was fairly mixed. Southwest Airlines reported a decent earnings, and then again, SAVE, S-A-V-E, which is Spirit Airlines, well, they didn't report so well, but it held. So what's the moral of the story? Transportations are going down, and maybe there was a little too much weight on the effect of a couple stocks in the airline sector didn't do well, but you look at this chart, it looks like a trading range to me, which all we did was come down to maybe the base of the range that we've been in since last, November. So I really can't get ultimately bearish there. I'm not happy as a bull, pleased or content with the fact that the transportation sector sold off and generated a sell signal. That is a red flag right there. However, with that said, I think that if we see stabilization in some of those airlines, the rails have been awful strong, and we've been talking about rails for months now. You could take a look at UNP. It's no secret there. If anyone's talking about the strength in the rails, I don't know where they've been, but you can't be talking about strengths in the rails now since they've been breaking out all the way since January, man. That's all new highs, and that's just Union Pacific. So the question begs, if the rails sell off That's a bigger problem to the transportation. So again, you got to do a little bit deeper digging into what's running the roost of these ETFs. Let me repeat that. You really got to do your homework and you got to dig in a little bit deeper, because if you just scratch the surface, you're going to find out that, maybe it's not as bad as it looks until the stock market generates a sell signal, until we make consecutive series of lower highs and lower lows, until we get a complete rollover in the advanced decline. Friends, I can't really get ultimately bearish. And there is always that chance that we could see this massive rollover in the market, wake up one day and we're going to find the S&P's down 50 handles. I get that. But more times than not, we always get early warnings for that. And right now, I don't have that early warning. So what I'm still focusing in on is maybe sector rotation into biotech and healthcare. It's underperformed for quite some time. And quite frankly, we all want to live longer. We all want a better healthcare. We all want to have a better quality of life, and therefore there are some dynamic programs and products that these biotech companies are coming up with and products. So with that said, I don't think that they're going to completely erode to zero. So if there's any money to be thrown into that sector, we could see a new leg, or at least a retest of the current highs that we made in the market yesterday. So don't discount it. And at this point in time, I can't put my finger on the sell button quite yet. Scalping, different story. But getting actual big time bearish, can't do that yet. I'll keep you posted. Thanks for listening. And again, if you got something out of this, give me a thumbs up. And if you have suggestions, let us know what we can do to improve the videos. We're trying to put out the quality better. And again, I think it's the content in which I wanted to share with you guys. And the takeaway here is simply this. Don't just get an opinion in the market. If you have an opinion in the market, before you put money to work, do your due diligence. Do some top-down drilling. Like I just gave an example in the transports. If you just looked at UPS and just looked at FedEx and just looked at one airline stock and ignored everything else, man, you're going to have a different opinion of the market, right? Well, again, that's the point. Do your due diligence. And that's what we're trying to do to help you become better traders, number one, and number two, to get what's best out of this market for your own profitability. Thanks, everybody.